All right. So last week Thursday, what I was doing was going over what we did so far, right? Because of some of the homework that you all submitted, some of you all are not grasping some of the concepts. So I wanted to make sure that we go over slowly everything that we did in terms of ABCD swings. So this was the same Fibonacci. So tonight's session is not going to be long because I think I need you all. Certain things will get easier and better with practice. All right. So if we have, so picture the pink here is the market, and we have a B, a C, a D, right? But let's say the pink is the market just waving on its way up. The market would make smaller waves, bigger waves on the way up, but the Fibonacci swings are not random. In an uptrend, the Fibonacci starts at the lowest point, all right? So it starts at the lowest point, not just a random level that you choose. And then you work your way up from the lowest point until you find the first high. Again, it's not just a random. If two candles after there's a high, that is your first AB. The only thing that's flexible with the Fibonacci's is your C and your D. Because the reality of it is, until the market hits or reaches that D level, your C is actually not confirmed. Meaning, there will be times where the market will go up like this. Let me use this. There will be times where the market will go up like this. It'll form a A and a B. It'll come down here. And if this is your D quite up here, the market could do this. Come up here, not hit the D, come back deeper into the level, and then go up to hit the D. So your A is set in an uptrend, lowest point. B is your first high, that's set. C, so for instance, in this example here, this would have been your C area first. And then when it came back deeper before reaching the D, your C would be moved to this level here as long as it stays between this AB level. So your A and your B is not random. Your C could move, but your D, so for instance, you see right here where the market came very close to the D but did not hit it. This is not where you adjust your new fib and say we have an A and a B here. It has to reach the level. So if what happens is we have a correction and then the market pushes all the way up like this, once it hits the D, the high rule comes into play again in an uptrend. Meaning, we now have to make sure that this level here is your first high after the D was hit. So to be clear, A is so we're dealing with an uptrend first. A will be your lowest point. B would be your first high. The C would be the deepest correction or U-turn within the AB boundary. And based on where that is, will determine where you expect your D to be. When the market reaches your D extension, you have to wait for the market to form the next high. So again, remember a low is 2 to the left and 2 to the right higher than it candles. A high is 2 to the left and 2 to the right lower than it. So it's not random. I see for some of you like we had ABCD and you all would come and say, you know what, you're starting the ABCDs and you just have them randomly here. You say start here and this becomes a AB, and that's not how it works. The market has to complete the swings before it has a new swing, and then once the swing is complete, the C becomes your new A and the D becomes your new B. So I'll do it from scratch again in a downtrend. Let me go here. If we have the market waving like this in a downtrend, if this is the highest point, 2 candles to the left, 2 candles to the right, this becomes our A. From here, we're going to go candle by candle until we find our first low point. this becomes our B. So based on this example here, right, this is your A, this is your B, this is your C here now, and we have a D somewhere down here when we actually spread our fibs, right? So if we have our A and our B, we could spread our first fib, and we would say, you know what, this market came back to the 618, so this is where we expect our D to go, but the market has to hit the D and then form a low for the swing to be completed. So based on what we have here, we have A, B, the market came to C area, fell, came back deeper within the boundary, so now our C would be adjusted from this level to here, and then the market fell, hit our D. But after we hit our D, we have to wait for a low to form in a downtrend, 2 to the left, 2 to the right. That becomes our confirmed D area. So now that we have our confirmed D area, we have, despite all the waves in the market, if we simplify it, we basically have our first down A, B, C to D. Now C becomes A, D becomes B, the deepest area within the boundary becomes C, and we'll be looking for a new D level. And that's how we keep plotting Fibonacci. So now we would have our new A, our new B, we have our new C based on where it returns. So we'd be looking for this market to push down to this level here. That's where we'd find our D extension. Once we touch this level and hit a D. So if from here the market waves, again, if from here we end up with something like this, and it still doesn't hit the D, we're still in that ABCD swing until it actually comes down and forms a low like this. So when it comes down and forms a low, that is when now we would have the second swing here completed. So we'd have our B to C, C to D. And now, same thing, you just keep repeating it. C becomes A, D becomes B. You'd be looking for a new C within the boundary, and then based on that, you'd be looking for a new D. Alright, so I hope that makes sense now. It's not random. So if we go, let me just go to another chart, go to any chart. Alright, so this chart has been pretty sideways just because I want you all to understand. Alright, let me zoom and we'll do here, right? If this is what we have in front of us here, first thing we identify our lowest point. And the lowest point in the chart would be right here. So if that's the lowest point, we could see that this market has been making higher highs and higher lows. So if this is our lowest point right here, it means that this is our A. So I'm zooming in. If this is our A point, we're looking for a B, a C, and a D. So we know this is our A, our lowest point. From here, we're going to come here. Does this candle have 2 to the left lower? No. Does this one? No. Does this one? Yes. But does it have 2 to the right? No. Does this one? 1, 2, 1, 2? No. And that's how you kind of skim through the candles. When we come here, this has 2 to the left, 1 to the right, maybe 1 to the right because of the highs. We need to actually check. The high of this candle is 70, 164. The high of this candle is 70,155. So no, this one is higher, so it doesn't count. We'll go. This is the first candle here where we have 2 to the left and 2 to the right. So this candle up here would become our B. Because it's the first candle with 2 to the left and 2 to the right. So we'd have our first Fibonacci swing like this, A to B. Based on the correction, like the market was very shallow with this one. This level here is our C. And that means it returned in the red. So our first D extension would be, and you could use your lines, that makes it easier, would be up here. Just like I told you in the example, you see how the market came up, it did not touch it. So until it touched it, you can't just adjust and say you have a new ABCD swing. We finally touched it here, but remember the rule, we have to wait for the first high to form after it touched it. So if we go through, just like we did before, touched it here, but this is not a high. Touched it here, 2 to the left, not 2 to the right. Touched it here, 2 to the left, 2 to the right. This candle here becomes our D. That's the first candle with 2 to the left and 2 to the right. So if that's our first candle, it means our first completed swing would look like this. A to B, B to C, C to D. Now C becomes A just like we did before, and we have a new swing. So we now spread our new fibs from A to B. You'll be looking for a correction, and again your D will start at the red unless we come back deeper within the boundary. And again you can see super shallow in terms of where the market came down to. We came down to the 382. So if again you could use 2 lines, one to drag from the bottom, so you'd know, one to drag from the bottom so we know the deepest area. This market came here and then went up, hit our D extension. So then we had a new A, B, C. This was a high, 2 to the left, 2 to the right, D. That becomes our new swing, and you keep going like that until the market takes out this swing. Or in this example, you see the market came all the way back down to the A. This market would most probably be consolidating. But that's how you plot it. So you start at the lowest point in an uptrend, and you start at the highest point in a downtrend. Are you all clear on that now? I was saying you all, tonight is only you, Donovan, in terms of the actual live class. Everybody else would be watching the video. But Donovan, is that clear to you so far? If it is, just go ahead and type in a Y in the chat box so I'll know. Still not clear on finding the C. So the C, let me do this then. The C, when we have a AB boundary, so this is a technique you could use as well. When you have the AB boundary, right, lowest point, first high, draw 2 black lines like this. That's your A and your B, right? A, B. C, you expect the market to retrace and then go, right? C would be somewhere within this 2 black lines, and D would be outside based on the Fibonacci swing, right? So when you reach to this point, A, B, you draw your Fibonacci's. C is gonna come based on where the market formed, but it has to form between this AB boundary if the market is gonna continue to be in an uptrend. And I'm taking it step by step, right? So you're with me so far on that. Just type in a Y so I know you're with me so far. Uptrend, first high or the lowest point. First high is a B, right? Now, based on that, because what I had to do initially, one of the techniques that I learned was to draw the lines like this. It makes it easier. As long as the market U-turns in the red, you know you expect your D to be up here. The thing is, when we have our AB, we actually don't know where the C would be. Meaning we don't know if it will U-turn shallow, if it will U-turn deep. If it comes deeper, remember, if the market comes all the way back down to the blue, we have to adjust our D extension to match the blue line outside, right? So if that's the case, when the market comes back here and starts U-turning like this, we are going to say, based on what I'm expecting, if this is the level that I'm looking at right now, this is my C, and based on that, this is my D. Because remember, as a trader, you want to be buying the C's up to the D area. Right? C to D. So when the market U-turns here, this market could start to push one time and push up to the D extension and then form a high, and that will be confirmed. Or sometimes what you would see is when the market pulls back within the boundary, we have something like this and then it goes up. So the C would move, meaning only when the D is hit you know that this was the actual C. But that's where, as a trader, you would be looking to find the C's to buy the C's. You'd be looking for additional reasons. Is this now an area of support and resistance? Is this an area of supply and demand? What am I seeing here? Am I seeing bullish candlestick formations here? Those are the things that you would use to determine your C level to get in the market and try and trade up to the D level. So when you have the two lines drawn like this, C is just the deepest point that the market comes back to before U-turning to go. So in this example here, in the second example here, initially you would have said just now. Right. Initially this would have been your C. Because the market was U-turning, you might have said this is your C. The market pushed and then came deeper in the boundary. So you would have moved your C from this area here to this area here, as long as it does not come down and cross the A. This is your C, which means if we come deep like this, it means that you're going to have to adjust your level. Your D would be here, because you would say, you know what, this market came to the blue level if it did, and that's where your D would be. That's where you'd be looking for the market, or for you to exit the trade and then wait for a high to form to confirm the D. Does that make it a little bit easier? Right? So that's how it is. Your A in an uptrend, first high. Sorry, your lowest point. B is your first high. C is the deepest point that it comes back within this boundary. Wherever it U-turns within this boundary, the deepest retracement, that's your C. And then based on where your C is, based on the fib, where it lines up, that's where you would expect your D extension to fulfill. And what you all could do, now sometimes I'll tell you with the smart fibs, sometimes it does not align perfectly. But as you could see here, I just plotted the smart fibs and you see how it aligns perfectly with everything that we drew. Let me undo it so you can see. Because you're using Smart Trader, that's a way to check if your Fibonacci's are correct. To use these smart fibs, all you're gonna do is the lowest point. You're gonna from what would have been your A, just plot your Fibonacci's from there. So you're going to click on it, click on Smart Fibs, and then you're going to come down and just click at the bottom of that level, and it will plot the fibs, and you see how they match, so you know you did it correctly. That's a way to check and verify the Fibonacci's. And I want you to watch. Let's use this level here. If we're saying this would be the example for the downtrend, if you start, all you do is click your Smart Fibs from the highest point, and you'd realize, all right, same thing. The first low, first candle with 2 to the left, 2 to the right would have been here. This would be a B. Let me use I'm gonna use the pink line to follow, right? Your AB. The market pulls back. This is your C, the deepest point. It came down to this red line here, past the red line, because you have to wait for the first low to form after it touches the red line. It touches the red line here, and then forms a low here, 2 to the left, 2 to the right. Good. So then we go again, A, B, C, and this is an example of it. You see how at this point here, you'd have been saying this is your C? So you would have maybe entered here, thinking the market was going to go from here straight down to this level. The market fell first, pulled back deeper, still within the red area, and then fell to the target down here, and past the target until it formed a low down here. So again, in this instance here, initially, this would have been your C. And then when the market went sideways a little bit, came back deeper, this would have been your C, because it still did not take out or come up to this level up here, which is your A. So A, B, C, still red, comes all the way back down to here, falls to here. Now we're at current market price, so A, B, C, this is where we're at when we talk about current. A, B, this market came to, if you're using your lines, it came to the red, so you expect the market to fall all the way to the red just like it did before. So what we would be expecting is this A, B, C, and for this market to work its way down like it is doing. It's just taking a longer time, but it's working its way down to that D extension, because you could see if we did sell here, we're still in the trade, but we're still profitable. So that's why you want to find and plot your ABCDs. You're going to look for C areas to enter and trade to down to D extension based on what the market is doing. Does that make sense? Just want to make sure, as I said, I'm not going to do class too long today, because I want to make sure that I keep it simple, that you all get this. And when I want you all to submit homework again, you are going to submit basically the same thing. I want you to pull up 2 charts, one in an uptrend, one in a downtrend. I want you to plot the manual fibs for me. I want you to do it manual, because yes, you could use the smart tools. My whole thing is, what if the smart tools is not working a day? What if you don't have your charts? The point of this education is so that you could determine, or you could, pull up a chart and be able to do complete analysis on that chart. So I want you to do the manual fibs first, submit it, and then you for yourself could double check, right, by plotting the smart fibs and see if it lines up. Alright, any questions based on this that we went through tonight? If none, just type in an N. No. Alright. So that's it for the session tonight, Donovan. I'll try to have this recording up by tomorrow, please God. But you'll go through, as I said, go through the fibs again and submit the homework for the fibs. 1 chart in an uptrend, 1 chart in a downtrend, and show me your Fibonacci's, your ABCDs, all the way to current market price. Alright. Have a good night.